Well, it's the weekend, and I thought it was going to be a light day, but Moody's throws a monkey wrench into the works. They just downgraded U.S. debt. The last agency holding America's credit at the top has finally cracked. And guess what? Could this move shake up markets big time? What does it mean for Bitcoin and crypto? Is this the next catalyst or setup for a short term dump? We're going to be breaking it down. Welcome back, everyone. It's your boy Tom here, bringing you the hottest in crypto action. If you like what you see, please give us a like. Make sure you hit subscribe and make sure you follow us on X, where we talk about crypto and Bitcoin all day, every day. Now, I've been always looking at what my compatriots have been talking about out on the marketplace, and nobody has been bringing this up. So I think it's, it could be a nothing burger, but, I really have to, as a technician, I have to talk about when like macroeconomic surprises hit the marketplace. You know, they, they could shake things up, and we're going to get into it right now. Okay, so really, the downgrade of U.S. debt from AAA to AA1 announced on May 16th after the markets closed, you know, basically, reflects concerns over rising national debt in the United States and growing fiscal deficits. Now, what will happen is there's going to be increase in interest rates because in order to attract more money now to the U.S. Treasury bonds, they have to pay a higher yield because they're no longer AAA rated. So this is going to create some issues. Now, if I'm going to go over, what happened in the past, the historical precedent. Okay, so I want to take you back to 2011. Okay, now this bar should be moved over to this little red bar right there. Okay, now the reason I moved it was because in 2011 the S&P downgraded U.S. debt from AAA to AA plus in August. Okay, now Bitcoin was in its early stages. Okay, it was only trading about below $10. So the downgrade led to an equity market decline in the S&P 500 of 6% in a matter of days. But Bitcoin's response was muted due to its nascent market. It's an emerging market, so it really didn't have any effect. But I want you to look, see if I can open this up a little bit so we could look at this bar right here. This bar basically was the spike up, okay, on it. It went from like $2 to 15. Then the marketplace calmed down, but it started right here. It started its upward movement. From that point, it just started to climb. Man, I wish it was 2011, don't you? Where it's $2. Only if I only knew what I knew, how's that song go? Whatever it goes. I wish I would knew what I knew now yesterday or something like that. But anyway, so however, it began its long-term uptrend in subsequent years due to distrust in the fiat system. This whole coin is based on distrust of the traditional financial market. However, in the short term, this could affect us. So I just bear with the history lesson, okay? Because we're going to get into it now. If we zoom over to 2023, okay, Fitch does the downgrade. Okay, now I have the Wyckoff structure up here because it's starting, you get to start to see how technicals and fundamentals start to come into play. Okay, technicals basically are a front runner to fundamentals. The marketplace is smarter than like the news talking heads. So, I mean, the news came out, on this line right here. Yet look Bitcoin was in accumulation stage at that point, and it started to break out at that point before the downgrade. So Fitch's downgrade of US debt from AAA plus saw Bitcoin trading relatively flat. This is what they're considering flat initially, but it rallied significantly in late 2023, reaching like 45, 50,000. Okay. So it was partially driven by, ETF approval speculation and then broader distrust in financial policy. So this suggests Bitcoin may not react immediately to this uh, rate cut as far as debt is concerned, but it will benefit long term from the perceived U.S. debt instability. So let's get over to like the short term, okay? I want to go over to a short term chart. It's not that. We know Bitcoin's going to follow global M2. Yeah. All right. So if I'm looking at, I want to go over to, I want to go over to this chart right here. All right. 4-hour chart. And I'm going to collapse this. I want to take this off right now, just so we could look technically. All right. The downgrade typically signals increased risk in traditional financial markets. Now we're talking about US dollar yen, sterling dollar, the crosses, the euro dollar, of course, because it leads to potentially higher treasury yields. A higher treasury yield through this cut is not great. It's basically a forced rate increase. So if we're expecting the Fed to cut rates, it wouldn't even make a difference, because now we're talking about the bond market. And the bond market, it toughs out more governments than like world wars. Like when, you're talking about World War II, you're talking about howitzers, it has destroyed more governments than, world war. Okay. The bond market is, is a very, very powerful marketplace, because it's really all of the perceived economic stability and future of any country. So this is not going to bode well in the short term for the United States. Now, the United States has a lot of good things going for it as far as foreign investments coming in, but that is sometime out in the future, maybe a year and a half, 2 years before those things kick in. So short term, this is not going to be good, because higher treasury yields, you need to raise the treasury yields in order to attract foreign money into your country. Now, that's where the point comes in that excuse me. That's where the point comes in, where foreign investors could actually sell off Bitcoin in order to cut some losses. In other words, they have losses in other things, and they may sell Bitcoin profits in order to offset the losses. So this is where we get the knee-jerk, reaction. All right. So if we're looking at the 4-hour chart, what we're seeing right now is basically we have like a lower tops right here right now, which is not great for Bitcoin. Okay. So if I take a trend line analysis, and I'm going to put up a simple trend line right here, this point is really the point of like, okay, a little bit of worry. Now, if the marketplace can break this is what I'm talking about, knee-jerk reaction. Okay, if we break through the 100, we have that support at 99,000. However, if I go to the EMA ribbons, do I have an EMA ribbon? Actually, I will do. I can even do a moving average ribbon. If I do a moving average ribbon, like as you can see, we can get down to a down to the 95,000. It's not a problem. We could actually move down to 95,000. Now that's the knee-jerk reaction. However, if Bitcoin survives this right now, if the marketplace survives this little bit of a shock, which, like I said, it could be a nothing burger. It could be just me being, overly, you know, sensitive to market movements, doing this stuff for a long time. You kind of get sensitive to it. Like you want to know like how the market's going to react. Like right now, I'm not. I want to know what's the price action right now is going to determine whether or not we're going to bounce off this short-term 4-hour support and take out this top at the 106. That's the most important level. So what I'm trying to say is that Bitcoin does have a safe haven appeal, but short term we could see investors cover sell cryptocurrencies to cover margin calls, or they don't know that they're going to be shifting to look for something safe. Now I believe that gold is the key to this. If we see an uptick in gold, gold has been basically selling off, and we talked about that yesterday, where JP Morgan said Bitcoin's going to outperform gold. However, this throws a complete monkey wrench into the works. So it's something that we have to pay attention to. If you start to see the gold market start to uptick and rally, then this coin in the short term is going to come down lower. But it's a point where you have to understand that if we go back to the main chart, right here where we talked about the last time these downgrades happened, we had massive rallies. So long term, this is incredibly good for Bitcoin. Short term traders, you got to be on your toes. Okay, so I want to go over some other things here. So just to restate, okay, just to restate, to try to keep my thoughts in order, because my head's flying all over the place because of this, and I don't mean to confuse you more. Short term, risk assets could pull back when this fear hits the macro scene, and Bitcoin's no exception. So we're already seeing Bitcoin hovering around just above 100,000. It's got to hold that. Okay, it's got some bearish, tones to it right now, because if we looked at the chart just that I showed you before, we got these tops coming in, lower highs, but we do have higher bottoms. So the marketplace is coiling in between this. We got the trend line right here that's extremely important for it to hold, say like 102, like right here. It's like right at the point that it has to hold. If we get the dump down, we could actually see that 99,000 that we were talking about, and on a real skid down to that 95. All right, so the downside screams one thing: currency debasement is real, sovereign debt is no longer a risk-free asset, and Bitcoin is looking better and better as a non-sovereign hard money alternatives. Institutions know it, smart money knows it. The only question is, are you positioning for the big picture? Now, if you're a short-term trader, okay, you want to take advantage of any type of, sale at the top at the 105 and scoop down back at 99. Great, that's a great trade. But however, if you're a long-term investor, you're not caring about this short-term baloney. We come over to the liquidation heat maps, we could see it playing out. We got guys short, looking to sell 104. We got guys looking to sell 105. Okay, so they're protecting that double top that we just brought into the picture. However, there's a lot of liquidation down here too at the 102. So if this spikes, okay, we could drift down lower to that 99, 98, 95. So we got that going on, and we have to be really, really cognizant of it. Now, let me get my notes around here. So, uh, you know, the tariffs that are going on that aren't helping stuff right now, but that's basically taking a back seat to what just happened with Moody's. All right, so I want to point you over to something that we got going on X. Let me see if I can find it right here. This is incredible. All right, this is another great happening for Ethereum. They're back in DC this week, meeting with the SEC to discuss Ethereum staking, tokenization, and crypto base exchange traded products, or ETPs. Now, this is not your average ETF meeting. We're talking about a major groundwork being laid for a flood of institutional capital into Ethereum and broader crypto. if this gets green lit, you know, billions can pour into Ethereum alone. And when that happens, Bitcoin doesn't sit idle either. It rides the wave as well. But it will also be now where we're talking about where Ethereum will start to be outperforming Bitcoin. So remember, we already saw that ETF flows, you know, what they did for Bitcoin price earlier this year. Now imagine that, you know, when you talk about Ethereum, Solana, Avex, or other tokenized funds, we're entering a new era where crypto isn't fringe anymore; it's financial infrastructure. The Moody's, the Moody's downgrade is the proof. It's the freaking proof that this is these coins and this marketplace is doing what it originally was intended to do. It was intended to decouple away from traditional financial markets. And of course, you know, the G7 is fearful of this. It's fearful of this. However, thank goodness that we have Trump in the office, you know, and he's basically pro crypto. And he's talking about, you know, establishing a crypto fund for the United States, a Bitcoin fund, for the simple reason that look at what's going on with the U.S. debt. So, from a charting perspective, Bitcoin is still in a macro uptrend. It still is. We still have that point where we got the hidden bullish divergence on the chart. We do have that. We need to hold the 95 level. Okay. Now, we could see, you know, short term, we could see a quick sweep to the 97, 95 zone before the bulls reload. And for me personally, if that was to happen, I think, in my personal opinion, it's a great place. If you haven't bought Bitcoin, you know, even if you want to invest a small amount of money into it, it's not a bad place to buy some. Now, if it even dips lower, fantastic, buy some more because overall, this is smashing the marketplace. It's smashing traditional finance. Now, you know, I'm a forex trader primarily, so I know my dollar yen long dollar yen position that was really good is probably going to get taken out on the Asia morning. I know that's happening after because the volatility in the forex market should be insane. So probably dollar yen is going to be they're going to run back into the yen as a safe haven again. So maybe sterling yen gets hit again down. You know, there's a lot of things going on in the currencies, but we're talking about Bitcoin here. So Bitcoin itself, you know, is really, really getting ready to explode. So before we wrap up, I want to make sure that you are aware of our trading community. You could click this link right here and it'll take you over to our site where you can join up. Everything that we're doing there is totally free. If you want, you can follow us on our trusted broker Weeks or WeX, I think it's pronounced, where we actually have a trade running right now. And here we go, right here. Weeks, great broker. It's perfect for our style of trading, low fees, fast execution, perfect for our strategy. So join, level up. Let's stack the stories and the profits together. So that's it for today. I mean, I wanted to talk about, you know, Bitcoin itself as far as what happened with Moody's. I think that it's important, and you know, like I said, my other compatriots really haven't really talked about it. Maybe, like I said, maybe this is going to be a nothing burger. You know, and I didn't expect, weekends, generally the market's quiet. I still assume that the market will be quiet. It will hold a range. But Monday, all hell's going to break loose, perhaps. And you got to be prepared for it. So I want you prepared for it. Okay. If we get the dip down, don't panic. Okay. It's part of what the heck is going on as far as, you know, with the Moody's downgrade. It's going to send financial shocks to other players, not necessarily us, but other players are going to react to this thing. And they may sell off, like I said, they may sell off Bitcoin and Ethereum and other altcoins that they have profits in to hedge their losses that they have in other assets. So, you know, the downgrade is going to rattle the market short term, but the fundamentals for Bitcoin and crypto just got stronger. Stay safe, stay smart, trade with your head, not over it. Make sure you follow us on X, where we'll be talking about all different Bitcoin and crypto. We got a lot of posts up here that you got to see. We're talking about Ethereum supply shock coming. There's a lot of great stuff on our X post. We got Bitcoin sell side liquidity inventory is basically gone. Yeah, but we got that short-term problem, with Moody's that we have to overcome. So make sure that you come on over to X, follow us on X, join our free trading community, and remember, always trade with your head, not over it. And remember, as a short-term trader, enjoy the party, but dance near the door.